On. We're good. All right, Gail, I think we're gonna get going here. We're running a few minutes late. Thank you. All right. So at this time, we are going to begin the AGM Town Hall meeting. We're going to be going over the budget, and Joel, our finance director, will be giving a presentation on the budget that's being put before the membership. And then there'll be some questions, time for questions about the budget after that. And then we will talk about the bylaw amendment proposed to the membership as well, and then have questions on each of those after a quick discussion. I'd like to thank everyone for showing up today. Appreciate all you guys that came out in person, and then we have people attending via Zoom as well. And so, yeah, at this time, I'm going to pass the presentation over to Joel. And if you guys have any questions, just save them for once he's done with the presentation, and we'll give everyone time to ask their questions. All right, go ahead, Joel.
Okay, thank you. Like AJ said, I'm going to be covering the Measure 1 agenda, or I mean, Measure 1 of your ballot. Yes, so the ballot that you get in the mail, probably most of the pages, all the financial stuff will be the Measure 1. Oh, can you hear me now? Is that better? Okay, sorry. So the ballot that you're getting in the mail, the Measure 1 with all the financial stuff in it, that's what I'll be covering right now. So I guess maybe what I should, now I've done this before. If you went back and looked at like board meetings in July, you would see where we covered this in a lot more detail because we spent 2 whole evenings going over the budget, 1 evening on operating, then on the second evening on capital, going over that. So I'm going to run through this a lot more expeditiously. So by 2, we'll be done with all of this stuff, or possibly sooner. But just like a quick overview of how the budget goes, since sometimes this is also a question that comes up in terms of like the process of how we put together the budget. So of course, I'm sure as most people know, budgets are projections. They're based off of historical data, what's happened in the past, and then what we think could happen in the future. And basically that's, in a nutshell, that's what a budget is in terms of putting together numbers that we feel will represent like what could happen in 2023, or most likely to happen in 2023. And of course, we don't just do that in a vacuum in the accounting department. This is a process that's done with the accounting manager, with me, with the GM, especially with the department managers as well, with the treasurer, obviously the board. So it's actually quite a few people that are involved in coming up with the budgets. Of course, now when it comes down to all of the numbers, like all the calculations and stuff like that, that's obviously where I primarily come into this, but we do take significant input from managers as well. For example, like, well, I know this has been floating around in terms of with FTEs, but basically with Mike Brock, he's our maintenance manager. And of course, he came from the city of Bellingham as well. He was in the Public Works Department, one of their managers. So like, as it relates to especially maintenance and parks, so this directly comes from his input in terms of how many FTEs he feels he needs to accomplish the task of taking care of both maintenance and parks as well. And so that's a prime example of it's not just us in accounting saying, oh, let's just do X, Y, Z. It's also taking the input of like the managers as well. So so that's generally how like the budget process goes. And obviously then it comes to the board, and then the board will vote on it, and then it goes to you guys out there in the community who ultimately decide on whether or not the budget passes. And that's basically kind of the groundwork for how the budget actually is put together and how it gets to you. And then after you guys approve it, then it becomes actually a part of the budget for 2023. So I guess what I'll do is I'll just run through the highlights of this. So like I said, this is called Measure 1 in your ballot packet.
Oh, jeez.
So basically in a nutshell, like how this is working, the thing that really kind of throws a kink into 2023 in terms of how the numbers look from one year to the next is this rec special assessment. So actually, I'm going to skip ahead real quick. Skip ahead to this page. Okay. So you can see in 2022, we'll focus on this area first. I'll just take that blue off, but you can see in 2022, your operation or your monthly dues for a developed lot right now is $144.31 and $58.63. That is ops. We have this rec special assessment, $11.78. So for your ops total, it's $70.41. And then we have down in here the capital element of it. So $36.10 goes to SURF, $37.13 goes to roads, and 67 cents per month goes to mailbox. And SURF is basically everything besides roads and mailboxes. So like this building, equipment, trucks, things like that, that will all be SURF. So it basically stands for Capital Repair Replacement Reserve Fund. And so in 2022, so your dues are $144.31 right now. So now the one thing that will happen January through May, so that this rec special assessment right here expires at the end of May. So there's really, I mean, it just flat out just rolls off. It's just done. However, you do see this going up to 1213 in January of 2023, and that's because that's what the rec special assessment says has to happen. So this 1178 has to go up by 3%. So in the interim, meaning just January through May, we've reduced the operations amount by the exact same amount that the rec special assessment goes up. And basically the bottom line is your dues stay flat at $144.31 January through May. And then this where things get a little interesting in terms of this rec special assessment right here expires, like I said, so it just completely, it goes away. So that's why you'll see that this is zeroed out right here. And then you'll see an increase actually to the operations dues right here. And then that's what I'll get into here in just a moment. But the bottom line is your dues for a developed lot January through May will stay the same, $144.31. Then June through December, your dues will actually drop to $141.81 to be in, because there was that SGM that passed in 2019, which limited the dues to 7% increase. And I think what I'm going to do before I do anything else is I'm just going to skip ahead as well to show you how that gets calculated. We're just in a quick nutshell. So basically this top part up here, this top part here is showing you how the rec special assessment gets, I'm going to hold that. But the rec special assessment, how this gets calculated January through May. So this is just showing you we have 3124 total lots. Here's a breakdown between developed and vacant, 2,678 developed lots, 446 vacant lots. And basically this is the amount that we're going to take in, total amount January through May, 181,443. And this budget is calculated on a 95% collection rate. So here's the bad debts calculated at 95%. Now in terms of, and then down here, is this on the website? Do you know this document? Well, whether or not it's John, I think posted. Has this been posted on the website? John, this document?
They're actually going up right now.
Oh, okay, good. So anyone can find this on the website if they look it up. It'll be on the main tab where you the annual AGM tab, I believe, is where it'll be. You just click on that radio button to the left, like this document will pop up on the website. Now, this is where it's showing. This section down here is just basically where it's showing how the regular dues gets calculated. And actually, before I get into this, these two boxes right here, this is where we're calculating how the dues. So basically that 7%, that 2019 SGM maximum increase of 7%, it applies to the regular dues. So what you're looking at in this box, and we'll just focus on undeveloped or developed lots. So regular dues right now, but I already pointed out before, it's 58.63 regular op dues, SURF 36.10, 37.13 roads, 67 cents mailboxes. But so for regular dues, so we're not talking about the special assessment. We're just talking about the regular dues. It would be $132.53. And then when we increase that 7%, or a 7% increase, that would actually be an additional $9.28. And then this sentence right down here is telling, this is where we're basically saying we're electing to apply this to the regular operating dues. So $9.28 to the regular operating dues gives you that $67.91. So then if I go back up here, January or June through December, you'll see that's how it's becoming $67.91. So that's how the regular operating dues are going up. But since the rec special assessment is dropping out, that's zeroed out. That's how you'll see the dues are actually June through December decreasing to $141.81 for a developed lot. For an undeveloped lot, it's very similar kind of situation, but actually, the way that it turned out in terms of that, like this could have gone up to 885, same sort of kind of format going on, but we actually elected just to keep it at 828 increase, meaning the bottom line for undeveloped lots, the dues won't be changing. So it's 134.67 all year long. And of course, we elected to do that in this case because really the difference, if we bumped it up that full 7% on a monthly difference, it'd be like another 1,600. And I don't even know if that would be worth the extra postage to send all the coupon books out actually for undeveloped lot owners. So basically the bottom line, if you have an undeveloped lot, your dues will not change from 2022 all the way through 2023. It'll be the exact same amount. But if you have a developed lot, your dues, as you know, right now you're paying $144.31 a month. And then January through May 2023, it'll still stay at $144.31. But then June through December, then it will actually decrease to $141.81. So that's kind of in a nutshell, that's the bottom line in terms of how much you'll pay on a monthly basis, assuming this budget passes. So like from there, then we can, now that we kind of have the like the bottom line of how much money you'll pay from month to month, assuming, like I said, that this budget passes, then at this point, then we can kind of get into I won't get into the minutia of this, but I'll just get into like highlights of what affected the budget. Actually, I can. Yeah. So like, I'll quickly run through this document just so you're familiar with it if you want to look it up. And like I said, it says Measure 1 because actually on the website, this is the Measure 1 information. It's just in a lot more detail in this document. This is 54 pages long, but on the website, Measure 1 is, what is it, like 8 pages or something like that. So that's the more consolidated version, I guess you could say. But and this executive summary on page 3 is also explaining the same thing with how the dues will, January through May, then June through December dues. And actually, this page, which you've seen before, the dues projection, basically just in a nutshell, what this is showing you is what just right now as everything stands, how dues could possibly be kind of forecasted just from this point. Of course, this could change, but from this point, 2022 through 2027, this takes into account like capital spending and stuff like that. But if you just wanted to think about it on an average monthly dues, what you would pay in 2023, it would be $142.85 on an average basis. But of course, vast majority of people here pay monthly, ACH, monthly ACHs, or they send a check in or whatever. And then, if that's the case, from one month to the next, just know that January 2023, your dues will remain unchanged through May of 2023. And then June through December, it will actually decrease to $141.81 per month. But if you were someone who liked to pay it, like pay it like a year in advance, actually that's on the major one, how much that would be, but, or you could say $142.85 times by 12. But I'll go ahead. Actually, this is a perfect page. So the next page after that, just depending on how much people really want to get into these numbers. This next page after this basically is showing you how these dues, like how much in total that this association will take in from these dues. So you see like the ops rec special assessment amount, meaning this is how much an annual total someone would pay. This blue column, green column, I'm just splitting out January through May, June through December. But like in terms of the bottom line, in terms of the ops dues, we'll take in about 2.35 million in ops dues. The rec special assessment about, so we'll take in about 172,370 in rec special assessment after bad debts. And actually after bad debts, sorry, for ops dues, it'd be about 2.24 million. And then down here in terms of SURF, we'll take in about 1.285 million for SURF, 1.322 million for roads, and about 23,861 for mailboxes. That's on an annual total. And this is all based off of a 95% collection rate as well. And if you're wondering, so like this year we did a 93% collection rate. We were trying to be more conservative. Next year we'll do a 95% collection rate. Currently, as it stands, like at the end of, so for like July and August, we're sitting around a 96.8% collection rate. So our collection rate is doing well. We usually do well collection rate wise out here. This next page is just basically, so just really high level nutshell, this page 6 of this document right here. This is just showing you on a departmental basis how much, like what the net expense or net revenue would be for that department. So obviously like counting right here. Counting right here says 373,980 loss. Now, of course, counting does have some revenue coming into it, but that just means what the net loss in a sense would be for accounting, since counting is not a profit center. Obviously, most departments aren't. And then you'll see like major income sources coming in, ops regular dues, 2.241 million. This is all after the bad debts. Rec special assessments, 172,000. Net marina income. So the marina contributes money to the association from an operation standpoint. 144,000. Gulf Enterprise actually is coming in at a slight operating profit, about 7,551. But then the rest of these are, of course, and this is just how it goes. The rest of these departments are not profit centers, overall profit centers. Now, in terms of, so we've done like the really high level in terms of like how your dues are calculated. And then the vast majority of this document is going to be your actual, if you wanted to look at a department by department breakdown of like 2018 actual, 2019, 2020 actual, 2021, so on and so forth. Then we do have the July year-to-date actual column in here. Then we have 2022 budget as it stands right now. And then the 2023 budget. And then the percent budget change going on here. Like in terms of this is the percent budget change from the 2023 budget to the 2022 budget. And so like, so just in terms of like high level type things that contribute to this budget. So we do have some things in terms of, oh, like for example, like property taxes. So we budgeted about 13.5% increase for overall property taxes, insurance premiums, approximately another 8% from 2022 to 2023 insurance premiums, utilities about 8%, fuel, it could be depending on the department, but it could be 15% or maybe a little more even for some departments. So fuel is another category that we focused on. Here as well. Now, the good thing is since we have a collective bargaining agreement, so obviously I'm sure most people realize that this place is unionized. So the Teamsters union, so that CBA was ratified in October of 2021, which means the good thing is for 2023, we have really good numbers. Like we know exactly what the wages will go up to because it's all spelled out in the collective bargaining agreement. So in terms of, so all of these wages have been increased exactly according to what the collective bargaining agreement tells us that it has to be increased. In most cases, it's basically in all the cases for the union positions, it's 3% increase in wages from 2022 to 2023. The medical benefits that we pay is, it's another good thing. It's spelled out exactly. It's actually going up 10.6% in terms of what the collective bargaining agreement says we have to pay in 2022 versus 2023. So that's immediately built right into it as well. And those, I would say would be like, and then of course, well, I guess I could. So I'll just quickly, of course, I'm going to run through this document pretty quickly. Because like I said, we spent a whole evening just going through just this operating budget. But like the big differences, and I'll just flash through these very quickly, will be in here. We already talked about this member assessments going from 2022 to 2023. Here's where you can see how it's actually increasing between 2022 and 2023. Property real estate taxes, of course, we did talk about that already. Legal services, we do have some increase built in for legal services, about 8% as well, from 2022 to 2023. And legal's kind of one of those line items to where like from one year to the next, you don't exactly know what issues will come up. So that's a little more difficult to forecast what kind of burning issues will hit Sudden Valley that legal will be involved for. So that's definitely more of a projection for that. Is that big enough? Okay. It's actually, I mean, this isn't really a huge line item, but the one thing is definitely we're going to have to send out a couple. Usually, most people get one set of coupon books for the year, for the whole year. Obviously, we'll have to send out 2 sets of coupon books, like at the beginning and then towards around May or so to reflect like the difference in the dues. So we have built in more for printing and costs for like coupon books as well. Now, one thing I will point out is if a person was trying to look at payroll on here, if you're trying to compare like 2022 to the 2023 budget, and in terms of budget percent change, of course, now remember how I did say that payroll is going up 3% because of the union, the collective bargaining agreement. And then like, here's a perfect example where facilities, or it could be any other department where you'll see, hey, wait a minute, this isn't 3% increase. This is, in this case, total payroll is going up by 6.4%. Well, this is a good example because when we did the 2022 budget, the collective bargaining agreement wasn't at that point to be finalized. So we had no agreed upon wage numbers with the union. So the 2022 budget is not in line with the CBA because it just flat out couldn't have been back at that time because the budget was basically, for the most part, finished back in July of 2021. And then the CBA wasn't ratified until like the very end of October of 2021, actually. So that's why, so the 2022 budget does not reflect a union wage number in there since they were unknown at that time. But for the 2023 number, we know exactly how much the union amount will be. And, I can just tell you from current rates right now, like what the union people are getting. So they're going up 3%. That's what the CBA says, that they have to go up. But that's why, just to point this out, this might not correspond. You might not be able to see Hey, he said 3%, that's more than 3%. But that's the reason why, actually. Now, if we went between 2023 and 2024, if we had hard numbers at that point for the 2024 budget, then that could be a different story in terms of if you were to compare these numbers next year at this time. I'll just now, most of these things I've already talked about. So I'm going to skip over like mention of payroll and insurance and property taxes, obviously, but then I'll just hit on maybe some other things in case someone was wondering, like other professional services for facilities. I mean, it's not a huge dollar amount that is going up. It's going from 1,000 to 10,000, but this is actually, we're building in some for a contract for gutter cleaning services for facilities for that one. Golf does not have anything like that's really out of the ordinary for this. You will see differences in utilities, but of course that's another line item that I won't specifically hit on at this point anymore, since we generally increase utilities about 8% or so, whether it's from budget or from prior years, looking back historically, whatever seemed to make a better fit for that. Of course, and I have talked about vehicle fuel as well. Actually, this is a good area to talk about. And of course, we've already talked about this, the rec special assessment. So rec special assessment revenue is obviously accounted for in the rec department. That's where you see this coming in. And so you will see, like, for example, you see this, which it is, a big decrease, it's a decrease of approximately 56% between 2022 and 2023. And that's because, as I've mentioned before, that the rec special assessment flat out ends at the end of May. So this will not be charged again July through the end of the year. So that's why you see that big drop off in the rec special assessment revenue there. Maintenance, I guess this is the one worth talking about. So this line item, basically we're looking at total payroll and benefits right here. And then you'll see that there is some decrease in the maintenance department here in 2023. And the reason why with that one, of course, as I talked about at the very beginning, that 0.84 FTEs. So basically 2 people in maintenance, their time will be allocated to the parks department, which it is. And that's because of that rec special assessment. Since there is a rec special assessment that runs through May, then 2 of these individuals in maintenance will be allocated to parks work through the end of that rec special assessment for certain at that point. Okay, this other professional services, we're still in maintenance right now. That's going from, you'll see from 5,000 to 15,686. Basically, this is for working in some vacuum street sweepings into the maintenance department. That's what we're anticipating for that, for this line item. And this is the other professional services GL line item. The arena department, here's something worth mentioning. So right here, you see this slip income here, these 3 line items. Then you'll see an increase of about 8.22%. And basically, so we're just working in just general increases to the slip fees. That's where this is coming from. So that's where you'll see the increase between 2022 and 2023. And I guess maybe going down to like the pool income. So you will see an increase between 2022, 6,000 to about 14,658. And of course, this is just, now we're looking back at historical numbers, like 2021 numbers for this, for the whole year was 14,424. And actually in October numbers, I believe, for the pool is at approximately around 13,000. So this is pretty much meaning 13,000 for October 2022 year to date actual. So we're pretty well in the ballpark for this number. So. Okay, here's something that where someone might think, what's going on with this? So this is the utilities line item. So we're still in parks. You'll see how this has just dropped off to zero. So it looks as though we're not budgeting anything for utilities. And the reason why that is we're not budgeting utilities for pools in pools. These utilities are also budgeted for in the rec department. So they've just literally been, the budget expenses have been shifted as well over to the rec department utilities. And I guess really the last thing for pool would be the pool management. So we're increasing 13,000 and 35,000 for pool management. And of course, and it's just because that's pretty much what the contract says. So we're just budgeting this based off of actuals and what we believe it'll be for 2023. And I guess really the last thing for the pool would be the pool management. So we're increasing 13,000 and 35,000 for management. And it's just because that's pretty much what the contract said. So we're just, okay, here in ACC security. So you'll see this line item, you know, we did increase hazardous tree removal from 60,000 to 75,000 in 2023. And this is another thing that's a little more difficult to project from year to year. We just don't, some years are not as bad. Like, as you can see here, even in 2018, 2019, 2020, these actuals, and then you could start hitting some years where it becomes a lot worse, like with storms or whatever. So, and we also have this year, in case people are wondering, so of course, I'm sure, you know, we have 60,000 that we spent out of UDR, the board approved 60,000 from UDR for hazardous tree removal as well. So we've done quite a bit of hazardous tree removal this year as opposed to like the year before or year before that. Now, the thing is, of course, we have run through, like, of course, and I went through this a lot. I really just kind of hit on the big things in terms, or things that appeared big for today for the operating budget. Now, the good thing about this document, if you're just curious, how much would a certain GL be for like the entire organization operationally wise? At the end of this document, starting on about page 42, you'll see this is where it's summing up. This is the all department summaries. So meaning this is summing up everything like in the entire organization. So like, so on anything that says all department summary, like when you're looking at a GL uniforms, whatever, 6408 GL for uniforms. This is the GL 6408 from whatever department has that GL. And it's just summing it up for every department for you right here in the all department summary. So like, for example, at the very bottom of this, total all department summary expenses. So here were the total expenses in any one of those years. And here's where you can see in 2023, we're budgeting $3,979,035 in total expenses for all the operating departments in 2023. And then, of course, you'll see here, net income, of course, is set at zero because we also have budgeted revenues for that exact same amount to achieve a balanced budget. And which is exactly how that's the goal when you do budgeting, is just to try to come to at least a balanced budget. The remaining pages of this document, so pages 48 through 54, this will be your capital planning pages. Now, these are handy pages because you can see like in 20, and the good thing about these pages is these have been fine-tuned to like align with the final reserve studies, which those are probably on the website too, I believe, as well right now. And so the 2023 final reserve studies are on the website. Those are level 1 reserve studies. Level 1 means they basically start from scratch. They come out here and look at everything. It's a full on-site inspection. And these capital pages were touched up, redone basically with those final numbers in it. So that is the good thing with these pages. And, you know, just like a quick run through. So like the 2023 column right here, you have your January 1 carryover balance, and on the reserve study, if you knew where to find it, I mean, you would see $1,253,251 starting balance in 2023. And of course, that just comes from, especially at the time, now this, in 2022, some of these numbers have changed just a little, meaning things that the board has approved since when the reserve study was really being finalized and stuff like that, but it hasn't changed to like a huge degree. But it's just all the projects in 2022 that have been approved or that maybe we're anticipating to be approved are also listed on here as well. And then that works its way into the beginning balance for 2023. Now, when I say beginning balance, I mean beginning cash balance in 2023. And then on here is, this is where this will correspond if you scrolled up through the document, the expected SERP reserve contributions, or meaning dues, 1.285 million, just estimated interest 6,000. And we're also adding back into this. So the board has what's called a kind of a carryover or holdback, basically an amount that they would not want to fall below. And so for SERP, that's 600,000. So then that amount is just kind of put right back in here so you have your available funds, so to speak, $3.144 million for 2023, for all of 2023 projected. And then anything on here is just basically anything projected to be spent according to the reserve study or according to the board, you know, what they would like to maybe move from one year to the next. And with the reserves, with the final reserve study, like a couple things have been kind of slightly moved from here to there, but not much. So this gets really dang close to what that actual level 1 reserve study says. And like, for example, if I scroll down and we look at the total for SERP, that 13,342,920. So if you were to look at the SERP reserve study, the final ones, you'd see that the current replacement cost is $13,342,920. But on here with these capital spending spreadsheets, this is where you can go to look at, you know, like on a year by year basis in 2023, 2024, so on and so forth. This goes out to 2032, but you can see what projects, you know, or what items are planning to be replaced in what year and for how much. And this This reserve study uses the exact same escalation of 4%. So that's what the reserve study uses, a 4% inflation rate. And so there's one in here for SURF. Obviously at the bottom of this for SURF, then you can see the ending residual balance, like how much our ending cash balance will be. And this is after that 600,000 carryover amount. So basically that's been pulled away from it as well. So in this case, the real cash amount would be 1.251 million plus the 600,000. But we just, to be conservative, just pull that away from it. But this would be the expected residual at year end for any of those years through 2032 for SURF. And then the final couple pages, same thing for roads as well. It's the exact same thing going on. Yeah, of course, another thing with roads too is, so this capital improvement plan for roads, so this is, I believe it's out to bid, right? Yeah. Yeah, so there's a capital improvement plan that will be done. And that's what this 102,817 is for right here. And then that also leads into these projects down below. So like the top part of this spreadsheet, this area right here is going to be basically like your main roads type work. And then as you scroll down in here, you'll see all the culvert type work going on. And plus the ditches, culverts and swales, meaning the CVC work down below as well. 2022, obviously through 2032. So at this point, of course, now like this is heavily focused on 2023. After this capital improvement plan is completed, then some of these numbers can be fine tuned as well, which will also lead into next year's reserve studies. And I think, did you want to say anything else about it? But I guess, like in a nutshell, of course, this version had to be a lot more abbreviated. Like I said, we spent like a whole evening just on the capital improvement plan and then another evening on the operating budget. But I think that pretty much covers in a nutshell, like the measure one, what you'd be voting on. So I guess at this point we could just open it up to questions early even. Now you have 10 minutes more of questions.
You said that you reset. Mitch Waterman, K2107. Joel, when you said it was a brand new reserve study, we reset. Did you actually eliminate everything that was there before and redo it? Because I think 2 reserve studies back, we were going to be extremely negative in a few years, but now we're not. So the question, I guess, is how much deferred maintenance do we send down the tube and kick back so that your number is balanced over here? I mean, I'd like to hear from the accounting manager, Sonia, if you don't mind. How much did you actually send and defer that was scheduled backlog maintenance for the last 7 or 8 years?
You're talking about capital? Things that were
Well, actually capital. I mean, capital is maintenance replacement for capital equipment, right?
Yeah.
So it appears that we have deferred a tremendous amount of equipment so that we're not negative in this reserve study, but yet we were negative because we showed how much work had to be done. So it's good that it's a balanced plan. The question is, how much did we defer out back many years so that we could balance the book? Thank you.
Well, I mean, like when these capital improvement plans were done, of course, we did this in concert with the reserve study specialists who came here and also with Tyler from PNW and also with Mike and department managers as well in terms of now some of these items in here, like for example, like trucks and things like that, which would have a remaining useful life of 2 years, but then the trucks themselves would be good for some of these people were thinking for a lot longer than that. Like some of that is built into the reserve studies as well. And then especially items that whether we don't have it anymore or whether it's just was removed literally for those reasons have been taken off as well. But so the reserve study person did a full on-site inspection. And so these numbers are a combination of our numbers in terms of like bids and estimates and stuff like that, and the reserve study numbers from the specialist as well for both roads and SUR.
One of the reasons that these numbers are different than in the past is that we removed a lot of buildings that don't exist. There was almost $14 million that we removed last year in properties that were never built, but were built into this reserve study. That also changes the look of it, which artificially appears that as if we are underfunded. We removed those. The other aspect is that we actually caught up on a lot of deferred maintenance that had not been taken care of previously. So this year, there were items that had been previously on past budgets that had been designed, et cetera, that we actually caught up on this year. Additionally, through dealing with the department heads and also the reserve specialists, we've actually added items to this, like the golf course cart paths, repaving and asphalting them, repairing them. And so that's been included on here as well. So there's a lot of items that he identified and they were added to this. But other than that, they were put on here at realistic numbers of what we can anticipate. And we drilled down looking at not just carry over from the past, but when did we purchase these items? When is the realistically, we have equipment, like for instance, the hydrovac machine, or that piece of equipment only had 131 miles on it. There's a lot of equipment like that here. And so this useful life, it's up to our department managers to tell us when they feel that these need to be replaced. And we did that. We went through the entire asset list. We removed items we don't have. And then they told us what they felt what needed to be replaced and when, and in conjunction with the reserve specialist.
Okay, well, first off, the hydrovac doesn't have mileage on it. It has hours. All right.
Hours.
You didn't answer the question though.
131 hours.
You didn't answer the question though. The question was, how much did you actually defer?
We didn't defer. This is what my point is. We not only did not defer, we actually caught up on deferred maintenance. There was quite a bit of maintenance. There was some dating back to when you were general manager that we actually did this year.
I'm so impressed with your productivity. I mean, it actually shows. So,
Thank you.
yeah, that was sarcastic.
Thank you.
So you gave examples of things that were in there that didn't exist. Give me an example of things that you took out of the reserve study that didn't exist. I mean, what was in the reserve study that didn't exist that you removed?
Brand new building for right here.
Which one? I'm sorry.
I think you had $6 million for a new building here, $5 million over at the clubhouse,
Oh, that's true.
a couple $1 million for parking lots.
So you don't have parking lots in here? Of course, it wasn't approved. It wasn't an active project, Sonia. You don't go in and ask, don't cut me off like that. You don't ask for a permit for a project that's in the future.
What you did though is you had it on a reserve study. It's inappropriate to put non-existent projects on a reserve study. A reserve study is part of a budgeting and planning tool. It helps us to know when our components should be replaced That's what this is. This is part of the budget. And what we've done is that we're doing it
You really shouldn't
appropriately.
discuss things you don't understand.
I actually do understand them,
Then if
Mitch.
you did,
I
you would
do.
know that a reserve study,
Mitch,
is-
please don't interrupt.
it's a
people.
reserve study is for everything you own. And if you own it,
You
so
didn't
the
own that.
you own the parking lot.
We don't own a design. You had a $1.2 million marina parking lot design that the county would have never approved. What we did is that we did redesign and reconfigure the marina parking lot. And we complied with the watershed standards. That was done. And we did it at 25,000 as opposed to 1.2 million that you had in the reserve study. The other buildings that AJ's talking about, you had $1.2 million to replace the maintenance building. That does not even need to be replaced. You know what does need to be replaced, Mitch?
Hmm.
That building that you claimed cost 850,000,
You think,
that dome building that actually only cost 125,000, that you placed that on a wrong foundation and it cannot even hold the equipment that's in there due to this moisture. Things are rusting in there and now we have to address that building. But you built a lot of stuff in there for 850,000.
that's right.
That's right. And it was on this reserve study at 850,000. We adjusted that properly because that building only cost 125,000.
How much?
So what we did is that we made things and we drilled down on what they really cost, what it will cost to replace them and the components. And that's what we've done. So really appreciate your input. Thank you. You're not general manager here anymore.
No, I'm not.
Yeah.
No, you've
Thanks.
gone through 5 since I was here. So
Thanks a lot, Mitch.
it's a shame you don't know what you're talking about. Oh, by the way,
Do you have a question?
yeah, you should probably look at the cost of that building. I think the fire system, just putting in the fire system was $250,000 to put in the building.
Hi, Jerry Moore from Gate 3. I was just wondering if there's a place on the website that we can see what the long-term strategy or plan is for each of the facilities that is owned by Sudden Valley. But more specifically, each building probably has a plan or a strategy. I'm sorry, Sonia, I can hardly hear you.
Each of our facilities have operational plans and maintenance plans that go along with them. They all hold books and maintenance schedules with them. And so, but they don't generally go onto the website. That's something internal with the operations and our department managers.
So there's nothing that says what's happening with this building, what's happening to the building next door that's all fenced up, what's happening to Area Z.
So
What the
there's
strategy is for,
the strategic planning information is on the website. There's actually a button that talks about strategic planning, and that's how we developed this. So in 2020, there was a survey that was sent out to all of the community. We actually did that to every third house in every division. And so we got a really good response, and that's how we began to do this 3-year planning cycle that we put into place. It's the goal of this is to mirror very similarly the planning process, the comprehensive planning process that the county and other smaller cities and counties utilize so that it becomes consistent. And so we've put that in place. We took input from community members, and that's how we began basing this plan. What matters to the community? And what we found is that the members like the assets they have, they just want them maintained. And so that's what we've really drilled down on a lot this year is let's catch up on that maintenance. Let's take care of the assets we have. The building that you're talking about, the ice barn, that becomes an issue where we'll have to revisit that. It'll come back to the board and the community because there's several options regarding that building that can happen there. And so it's just a matter of making a determination on that. And so.
Just to restate, it sounds like there's no place, I'm new to the community, so I'm trying to catch up. Any place I can go to say, well, this is what's happening to the ice barn. we now moved into the Welcome Center. So this is what's happening to the space that we have in the existing, where the Welcome Center used to be, or the administration staff. There's no place that a newcomer can go and kind of understand what the strategy is. It
So-
sounds like, if I heard you correctly.
Sounds like what?
Huh? It sounds like there's no place to go find that information easily.
Some of that is being developed in the strategic planning team. So we have, we've got the election coming up. And so the board and the key senior management staff and the long range planning committee will then reform that strategic planning team and then revisit that and bring back in community input as to find out, what exactly does the community, that's one of we started that with the survey for the Welcome Center to, how would you like to see it? It's 3.6 acres. What would you like to see? How would you like to see it used for the community? The clubhouse, the kitchen will be finished this next week, the repair, the water remediation. And then there's a lot of office space. There's storage that will probably move the archives in there because right now they're being damaged where they're located. And so, but other than that, that's one of those things where we will invite more community input on how would they like to see that.
Thank you.
Okay.
Nancy had her hand raised in Zoom a little bit ago. Should we check in with her? Nancy, did you still?
Yeah, it kind of solved itself when Mitch Waterman sat down. I was going to do a point of order because of the way he addressed the chair, but since he's not addressing anyone right now, my hand is down. Thank you.
My name is David Gustafson. I live at 40 High Cliff Lane. You've talked about strategic planning, and I'd like to know what your strategic plan is for the structure that was vacated by the administrative staff when they moved down to the waterfront and basically emptied that building in terms of usage and personnel. What are you going to do with that? Is that going to become a revenue source? And if so, where is it in your budget? I don't see what your projected revenue is for that structure. I'd just like to know what your plan is for using that space.
I mean, the plan at this point is to continue to clean up the space. I'm sure we'll probably end up using some of it for record storage. I know in talking with Mike, the records out in Area Z could use a better storage place than where they currently are. So hopefully something like that can be worked out with some of the space. And then I think, the board will be working with staff, senior management staff, like was just said, and the strategic planning team to come up with, what that space could be utilized for. I think most of the space is still functional and utilized by the golf enterprise. So.
I have Linda on Zoom. Linda, I've brought you over to the meeting.
Can you hear me, please?
Yep, we can hear you great.
Okay, I have two questions for Joel, please. In the booklet, there's a section on the reserves where it talks about served roads and mailboxes. And there's a percentage of funded in there. And I want to know these numbers come from that new reserve study. And then on another page, and I'm sorry, I don't have page numbers, it refers to the deficit per unit in 2023. And I'm just wondering if that reference and the chart is based on that new 2023 reserve study.
Yes, actually, so both those numbers reference the January 1, 2023 starting reserve numbers. Both of those percentages and the deficit as well. So that's what it would be at January 1, 2023 projected.
All right, that's all I needed to know. I just was curious because we're talking about reserve studies past and present, and I just wanted to make sure that the numbers in the booklet were from this 2023 reference, that we are indeed not that well funded. Thank you. That's
Yes,
all.
Yeah, those numbers relate to that.
Thank you.
Thank you, Linda.
Yeah, and Linda, those should be posted to the website as well.
Okay, thanks.
The reserve studies, yeah.
Well, I just wanted to have a follow-up question, but if you want me to wait, I'll wait.
No hands raised presently in Zoom.
You talked about the fact that some of the space that was occupied by the staff previously in the old, we will call it the old administration building, will be used for storage. And it sounds like there's nothing else in the plan. Your strategic plan doesn't seem to include any possibility for using that space in a way that would generate revenue to hopefully offset some of the money that you spent on the property down on the lake. You took an awful lot of our dues money and put it into that structure down on the lake. It's a nice resort looking spot, but I'm just wondering, how are you going to offset that? What are you going to do to offset the money that went into that structure and for maintaining that structure and for bringing that structure up to code? And why don't you have plans for using the older space for revenue? What are the possibilities for that? Has anybody explored that at all?
So thank you for the question. I'll answer the first part of it. Accounting staff were housed in the basement portion of the clubhouse. That space is slated to be cleaned out, and as has been mentioned, created as a storage place for primarily the architectural records. As was also mentioned earlier in the meeting, the place where those architectural records are currently stored has a very high amount of moisture in the air. And of course, those records are paper and they are degrading rapidly since they've been moved there. Since those paper records, those architectural records represent a huge value to the community, and because they are frequently referenced to support current building projects that may want to know, where something is buried or how something was approved before, we want to have a storage facility for those records that makes them more easily available so that we can respond quickly to requests for documents. We don't have to make a special journey and then go through the many boxes in basically a giant storage container. So that lower basement space, which is immediately adjacent to the boiler room and some other mechanical rooms that support the clubhouse building, that will be, as I said, cleaned out and furnished particularly for the storage of that type of record. So that's the first part of the question.
And I'll address the other part of your question. There are a lot of opportunities for revenue generation of that building. As you know, it's a golf clubhouse. We've already been approached by the golf director and a business partner who was interested in taking over the clubhouse operations and the course. One of our initial discussion was that if we were going to do that we would put that out to bid for national companies as well. We wouldn't just do something like that without seeing what type of revenue that could possibly generate for the association. But all that being said, the AGM is coming up in November. And so it really wouldn't be appropriate for us, this constituted board, to just rush that decision through. That's something for the new board that's going to be coming in November. I'll be on that board, and hopefully everybody at this table will be on that board. But that's something that the new board, it's not something that we needed to rush through. It's something that we really need to take time. We need to look at the golf course. We need to make a determination, and we need to allow community input to make that decision. But there are a lot of opportunities to utilize that building as a revenue generating space.
Jerry Moore, Gate 3 again. I didn't see anything on the balance sheet that's available, so we can see the health of the balance sheet year over year and how that is. Is that going to be presented or available?
All those balance sheets are actually on the website. So we put monthly balance sheets on the website, and you could go back and look at balance sheets to maybe 2015, actually, I think.
Well, I see it comes out in the paper, but that's the last one we saw was
Oh, yeah.
as of June. So
Actually, if you go to the Sudden Valley website and then click on that committee information button on the left, I believe it's the purple one, and then
Okay.
select Finance Committee,
okay,
and then select Archives, you could see like all the financial statements, tax
Okay.
returns, things like that.
thank you.
Right there, yeah. Let's use one in Allen. If you're just wanting like revenue numbers, but you wanted balance sheet numbers, right? Not revenue expense numbers. Right, okay, yeah. Yeah, so on the website, you'll see.
I'll just provide a brief interjection here for our Zoom audience. If you wanted to join and you weren't familiar with how to do so, down at the bottom of your screen, you should see raise hand. You can use that to get our attention, and we can bring you over to the meeting.
So what is the protocol? Can I start talking? Do I need to be recognized?
Go ahead.
Gail Chiarello, Gate 1, Inlet Circle. A simple question for John. How many members of the community are actually watching this town hall? Because it concerns me that we don't have a lot of people present for something so important. Now, I realize that Zoom makes it super, super easy to just, watch from your living room or wherever. But I'm wondering if you could let us know. That's my question for him.
I can answer that. Zoom, at one point, we did have 11 attendees. On YouTube, I know there was another 10.
All right, well, hearing no further discussion or questions on measure 1, we can move on to the bylaw amendments. So there's 2 bylaw amendments that are proposed. The first one is amending Article 3, Section C, to include a new section on the sale of non-trust properties. So Sun Valley non-trust lands are those not held in trust for the benefit of the members. I'll pause one sec. Are you putting it on the screen? There we go. All right, so the measure 2 is amending Article 3, Section C to include a new section 25, sale of non-trust properties. Sun Valley non-trust lands are those not held in trust for the benefit of the members. The SVA must manage trust assets in the best interest of the members. However, non-trust properties such as Area Y, Area Z, the campground and airstrip can be sold by a vote of the board with the use of the proceeds determined by the board. Through this measure, the board will cede its decision-making authority to sell Sun Valley non-trust lands, placing that authority in the hands of the membership. So there's also a detailed changes showing the exact language that will be put into the bylaws. I'm not going to read that verbatim. And then the third measure that's being proposed is to amend Article 3, Section C to require member petitions to contain the purpose of the SGM, the proposed wording of any measures to be submitted to the membership, printed name, signature, street address, and lot and division number for each signature, and designation of a representative and backup representative for the petitioners, both of whom shall be Sun Valley members and who are authorized to receive communications from the association concerning the petition. This measure ensures petitioners are represented by requiring the designation of an SVCA member as the petition representative. This bylaw amendment also clarifies what information is required to make a petition signature valid. So those are the two measures that are being put before the membership to amend the bylaws. Yeah, I think they're both pretty self-explanatory. So at this point, I just open it up to questions.
Shall I wait for Zoom?
Go ahead.
Hi, Mitch Waterman, Gate 2. The non-trust, it's a interesting conversation. Why does it not include a prohibition on purchasing non-trust? The issue that most people have with the 1850 property is not that we own it. It's that how it was purchased. It's probably a value-added asset, but we have no idea if it was purchased equitably because there was no appraisal. So this measure doesn't change, unless I miss it, doesn't change that the board has the right to purchase more non-trust. That's one. And the other one is that from time to time, members come to a person like a GM and ask, or the board, and ask to surrender their property. They can't afford the dues, or the family, the owner passed away. The property is going to go into receivership. The county gets it, and it's no longer developable, or many other reasons. Lots. A couple of years ago, Linda Bradley and another director and I were on a committee to figure out what to do with some, I think, 89 lots that we had. And as of a couple of years ago, we don't have any. Now, those, if they're purchased or brought in, would be non-trust. And we got out of the real estate business. But this, then you would have to ask the membership for permission to sell one of those lots or to auction off that real estate, which we did. We auctioned it off. So why not have the prohibition on purchasing? And then what are you going to do with some member that says, I want to get out of a lot? And we want those lots to go right back in there, our tax base, and then we'd have to sell them. So would you have to put that up for a vote of the membership? Thank you.
The language says specifically restricts lots, residential lots. There's language in the measure that discusses. The language says that this section shall not apply to residential lots within Sun Valley, which the association may from time to time acquire through lien foreclosures, tax sales, voluntary transfers, or other means. And the language was written by legal counsel. So
So I'll,
Does not include a purchase.
well, yeah, so I'll
Yeah,
address.
it's not in there.
Well, I'm happy to address the first part, because the reality is that as long as any, as you know, you guys took out a $1.2 million loan and then it, increased, much more than that, without a vote of the membership. And this isn't the first time that actions have happened. You built a new building out at Area Z with those funds. And, so that was not a vote of the membership. You created a facility that then we have to maintain over a long-term period of time, no vote of the membership. And that cost $850,000, very similar to this. So in the process, the way that this happens is that the board cannot do anything without a vote of the membership that would impact your dues. So in order to make the determination of whether or not to purchase that building, we look to our finance director to determine, is this going to impact us in any way? Then on top of that, the bank looks at it and our attorney has to actually draft an opinion after he reviews all of the documentation. Our attorney was actually our representative through the entire process. Sudden Valley's association attorney, his job is not to look out for the board. His job is to look out for the association and protect the assets of the association and act in the best interest of the association. So he had to draft an opinion that this was not going to impact dues and that this decision was legal, that we weren't violating the state law or our bylaws by doing this. It's the association has set a precedent in the past of doing this type of thing. As I stated, because even when Mitch was GM, that's something that had occurred. It's very similar to what happened when we took on the roads in the Whispering Cedars or whatever it's called area. Those individuals actually had their own road association, even though they paid Sudden Valley dues. But then the board decided, well, we'll take ownership of your roads, which means that we then we became obligated to take care of those roads the rest of the time. And so there is precedent for the board making those types of decisions.
Is there anyone on Zoom, John?
No hands raised.
Go ahead, Mitch.
Thank you. It shows Nancy. Oh, okay. So I don't want to get in an argument. So first, the loan process used by the board in 2016 was to commit to a loan against the dues, which is the same loan process that this board used to take out a loan against dues. So please don't point a finger at me on a $1.2 million loan the board approved, because it was allowed to approve, and you demonstrated that by taking out a bigger loan for the building. That's one. The other is that in the capital request,
Actually, Mitch, by the way, so that bigger loan.
Yeah.
Assume the original SURF loan.
understand at a lower rate too, which is
We did.
a good deal. Refinancing the loan was a good deal. Oh, no question. That was a good business move. Again, the issue here is how it was purchased, not that we own it. Now, as to Area Z being a building that was installed without a vote of the membership, if you look at the capital request stated it was being put in because Barn 6 was written off by an engineer as a dead building, and it was a like for like, actually a decrease in square footage replacement, zero-sum gain to the association. Number of buildings here, that one was less. So that's how that was done. And the lawyer did agree, as it was written in the capital request, we're putting one in, we're taking one out. Now, last part of this is that the Roads Association for Whispering Cedar, they brought their roads up at their cost to 100%. Now, it was allowed under the bylaws for the board to accept it. This would go to the membership now. That's fine. If this goes forward, the membership would vote on it. What we required them to do was to bring those roads to 100% on their money, which they did. So, thank you.
Linda's got her hand raised in Zoom.
Yep.
All right, Linda, brought you on over here.
Hi, Linda Bradley, 5 Wisteria Lane. One of the questions I have about the 1850 building is, that's been brought up, is that as long as it doesn't affect the members' dues, that you don't need approval. Nothing was ever presented or has been presented yet as to exactly what ongoing costs this building is going to have, what additional capital things it will need. Certainly a new roof, certainly siding, water heaters, that sort of thing. You have no guarantee, nor did you provide anything to the members, that down the road, our dues will not be affected. So I don't know how you can say that. You can for this purchase, but even then you're spending some of the money that's already been turned in for other purposes in the capital account, that sort of thing, and moving money from the excess from operations last year. And I'm just saying, so you're going to guarantee now that there'll never be any change in our dues in order to facilitate having that additional facility? That's my question.
So if you look at the current budget and then the capital planning, it's based on the inspection report that we received on that building. And then also, so we've got the capital plan in the 10-year capital planning project of what we anticipate needing to be done at that building as far as additional expenses, just the daily operations. That's also been built into this 2023 budget.
All right, thank you, Linda. I'll go ahead and move you back to the attendees now.
Do you have questions about the bylaw measure? So I'm not really interested in strolling down memory lane again.
Well, your memory lane, Waterman, Gate 2. Look, AJ, it's not a question of strolling down memory lane. Your treasurer.
We don't need to just sit and go back and forth. It's not really productive and you're not really accomplishing anything.
Well, okay, first off, the memory lane stuff, it comes from your treasurer throwing out stuff.
Yeah, you guys
Here's
can
my
take your
question.
personal beef if
Here's
you
my
want,
question.
and you can move it out there so the rest of the community
Can I give
doesn't
you-
have to be subjected to it.
Can I give you my question? I came here with
If you want to ask a question about the bylaw amendments, 'cause
Do.
that's what we're discussing. Yeah.
So you gave me a one-word answer and you said no. I asked, okay, you're limiting in this bylaw the ability, if I.
Yes, we are limiting the
But you're-
ability to sell the
but
lots.
not to buy.
No,
So why?
there's some
what is the-
plethora of lots to buy.
That's what I'm asking. What's the thought process that a board can continue to bring more trust property in without a vote of the membership, but they can't get rid of? So a board, next board, 3 boards, 5 boards down the road, they think, hey, this is a great thing. We'll buy the strip mall. They get to buy it. What's the thought process? You gave me a one-word answer. I don't think that's a fair answer. What was the thought process in not restricting that privilege?
Thought process is the goal at this point is to protect the undeveloped properties that we have from being developed, which has been discussed repeatedly over at least the years that I've lived here, and trying to create more lots in an effort to generate more dues revenue.
So I just want to add that the process to purchase is actually dictated by law or bylaws, as we've already covered and as you're aware, as the former GM.
Yep, Nathan Ewan, Gate 13. I'm gonna ask a question and just followed by a statement. So the question that I have is, and maybe she can answer it. She's online. You have a board candidate who wrote into the views that is stating there's 2 property deals in the works, something about Sun Valley selling some property. And that's why she's, advocating for this, this bylaw changes because you guys are worried about some sort of sale. If that's the case, wouldn't that be this current, board in some sort of property deals? And I'm just wondering if there's any details on that, because that's kind of weird. Maybe she can answer. You guys may not have that. If you read the views articles that a board candidate wrote for this month, she states in that there's 2 property deals currently in the works for Sun Valley selling off some sort of property. If you read the views article, maybe she can address it online. Maybe I misread it, but
Was
that's
she?
Nancy, board candidate Nancy. So if that's the case, I'm just curious what those deals are and what you're really worried about. I mean, down the line, I get it. You don't want to sell these properties. You don't get it. And the statement I want to make is that whenever a question's asked and then you guys say, oh, we did this because the last board did that, or Mitch did this, and that's not constructive and not helpful. Move forward. Don't point out, well, we bought this property because you did this property with this property. It's not constructive. I mean, moving forward, right? What I see is when I look at all the boards and I read all the minutes that I've read and all the meetings that I've watched, is this board was handed things that were kicked down the road. You guys are handed things that were kicked down the road. Everybody's a volunteer just trying to do their best. Mistakes are made by every single volunteer board that I've seen in these minutes. But to point back at just Mitch or, this and that person, it's not, it's not very, that's all I got. Thank you.
Yeah, it's not very productive. That's why I asked it to kind of just stop. I think the community as a whole should probably consider that and reflect on that. Like, it gets tiresome, gets old.
Nancy has her hand raised.
So I'd like to.
A lot of personal beefs that I see that go back far too long that the rest of us don't care about. And the rest of us all get dragged into it. So.
I would like to clarify something though, because it does matter when we're talking about precedent. Because Mitch was asking a very specific question of what gave you the right to do this. That it's the precedent that is set through the association and the action of past boards. That's relevant to the law and the guidance that our legal counsel gives us. So that's not placing blame. I pointed out, since he asked a question, and he's very familiar with what's involved in the process. So that was relating back to precedent. That's not placing blame. So I just wanted to clarify that. Thank you.
John, you said you had one?
Nancy has her hand raised. Go ahead, Nancy.
Thank you. As far as the deals, if you want to hear the first one, it is if you go to the board meeting on April 28th, go in about 6 minutes to 20 minutes, you will hear a former board director describe a land deal for, I think it's Area Y. And it's basically in return for road we don't really need, developers would take that acreage off our hands. Now, 40 acres of undeveloped acreage in Whatcom County along near the lake is worth quite a bit. And if I go through it, which I'm not going to detail why that is such a bad deal for Sun Valley that he described, that I'll just tell you it is. You can listen to it yourself if you wish. April 28th at 6 minutes into about 20 minutes. That's 15 minutes of description. The second was a rumor. I heard about the campground. Nothing specific, but the campground is something I know I've heard various interest in, and I won't tell you from whom. Actually, I think it was the city, but another issue. It has water because it had the bathhouse for the campground in it. And it backs up onto Galbraith Mountain type bike trails. So it has attraction for someone to build on. And I can't tell you what the deal was. Just that it had interest apparently from a development group, as well as from the city that probably just wanted to use it for bike trails or whatever. Personally, I think it's a great place to put a parking place so horses can access those trails. That's just my personal biased opinion, and I do not recommend Sudden Valley go into the horse business. Been there, done that.
So
I hope.
Nancy, hold on just a second, just to clarify, because Nate was saying that he thought you had said that the board was in discussion about selling 2 properties. That's
Oh,
not what you were
heavens,
saying.
no.
Okay.
No. I'm just saying this is what can happen, and it only takes 5 board members, a majority, to settle those for whatever deal they happen to want. And that is such a big temptation for individuals to set up some sort of a sweetheart arrangement. I mean, it's worth a lot of money. And I just think that having this bylaw amendment where it takes a vote of the membership, in fact, a 60% vote of the voters that are voting, of the ballots cast, not just the number of members, but of the ballots cast, is a good protection so that value that we have, that Sudden Valley has, isn't squandered on some fly by night. I mean, face it, 5 board members could get in for 1 year. So Area Y, Area Z, the airstrip, and whatever else, campground, whatever else they could think of. Members wouldn't be able to stop it. So I think it's just a protection to have good intentions. I don't know how else to word this. I'm not accusing of anybody of malfeasance, but this board has absolutely no plans to sell it, any of that stuff. Have I confused everybody? Probably. Sonia, are you good?
It's good, Nancy. Thank you very much. So just to clarify what she's talking about is there has been some interest in the campground. We've heard it. There's been call-ins to board meetings saying we should sell Area Y. And honestly, we were already working with the attorney for this prior to those actions. Just so you know, we started talking about this last year because people have always been concerned about these non-trust properties. They're millions of dollars. They are the asset of the membership. And those types of sales are, they're negotiated differently. These are big deals, and generally whoever's going to purchase that, maybe the county or like Whatcom Land Trust or somebody like that. So you would negotiate them differently, and we would have the appropriate amount of time to allow the membership to vote and give feedback, and then, you know, deal with the negotiations on that. But most definitely, that's why to do that is protect those assets so that because as AJ explained, when it's a non-trust land, all it takes is a majority vote of the board to sell that property. That's all it takes. And then those those revenues from that can be directed any kind of way that majority board determines. And that's the power of the board, and that's the law. And so the way this is worded is that if the members vote for this, and I would encourage you to vote for both of these measures and vote yes. But if you vote for that, what the board is saying is we're going to cede our legal right to control that property. We're going to cede that and hand it back to the memberships so that the members can make that decision. Thank you.
If this goes through and the members do approve the sell of something, the proceeds from that, who approves what happens to the proceeds and how it gets reinvested? Under this current change, it's not clear to me what happens with those proceeds.
So typically what would happen would be you would, with the sale of the property, you'd likely be asking the membership, like, we're gonna spend the money on X. For example, like in the past where the Lakewood property is for Western on Lake Whatcom Boulevard, Sun Valley used to own that. They sold that Byron track, I think is what it was called at the time. And there was a whole other part of that where they were doing density reduction. It's where the association worked with the county and the city to pull lots out of Sudden Valley and put them into permanent green space. So like in that instance, they sold the Byron track and said these proceeds will go towards buying lots in Sudden Valley to take them off the tax rolls and put them into permanent like conservation.
So you're talking history before I got here, but looking forward, based on this change that's being proposed, the membership has the right to determine if the property's sold. Who has the right to determine what happens with the proceeds from that sale?
Yeah.
I can't hear you, sir.
Be part of that ballot discussion. So like we're going to sell the money and we're going to put the proceeds into, and we're going to create an account.
Okay.
It's called whatever it may be account. Like in the previous example I said, it was called the density reduction fund. So the proceeds are put into that, and then the board had to put together a whole plan for that show the community and how they were purchasing those lots and pulling them off the rolls and stuff like that.
That, when I read through the proposal, that was not clear with regards to the proceeds. So I was just trying to clarify that piece, because it doesn't talk about what happens on the other side. Thank you.
Yeah, and that could be something maybe that it's like beneficial for the board to have like a policy on or something. But anyone on Zoom, John?
Not at this time.
Anybody else have any other questions on measure 2 or 3? Well, I'm not really hearing any, so that would be the conclusion of the AGM town hall. We do have a short break to set up and convert over for the candidate forums, and that's going to start at 3:30, right?
3:30. Yep.
I think it's 3:30. All right.